doesn't matter the gain that you have, in capital gain is always going to be 15%. So a lot of people like that, okay? So what happens when you have rentals? First of all, it's really important for you business owners to be careful and to plan ahead on what do you want to do. Not only to buy a house for rent, also for your own house when you want to buy it, because taxes are going to be probably the tool that I need to buy a house, 99%. I know that there's some cases that you allow, that I don't know because I'm not a loan officer, that when you're a loan officer, do you request 99% of the time the taxes? Or sometimes it can be other things? Do you know?
Sometimes it could be other things. Sometimes there's other products that offer bank statements. Sorry, they both walked out.
Oh, okay.
They do ask for the taxes. Like if you want to know the taxes that they're going to be paid out of the.
So I am doing a refinance right now for an investment house, and they ask about my taxes, because that will lower the rate. If I don't do it with the taxes and I do it with other type of tools, I don't know if it's higher. We can ask the loan officers. Don't worry. But
What?
here is the loan officer. Okay, question for you.
Go ahead.
Yes.
The percentage of the time that you request the taxes to be able to give a person a loan. Do you request 99, 90%, 80%? Can I buy a house without taxes? I have never filed taxes. I don't like to file taxes.
Okay.
Micrófono. Yes.
Perfect.
Oh, perdón.
You want to come up front? Step here.
Okay, okay,
Yes.
It's not going to be loud. It's going to be for the people online.
hello?
That's for the people
It's
on.
for the people online. So just go ahead and speak.
Okay, okay, so the question is the percentage of time that you will be required to provide taxes to the lender. If you're self-employed, we always ask for tax returns. Now, the reason for that is because the best products on the market will qualify you with tax returns. So if you qualify with tax returns and you have enough income, then you're going to get a better loan. So we'll ask for that. It doesn't mean that you'll qualify, because a lot of times there's a lot of expenses that you won't qualify. Doesn't mean you can't get a loan, because there's several other loans that are available if you don't have tax returns. Now, there's loans where you can get with bank statements. Bank statement analysis, right? If you have enough deposits, the lender will take a percentage of that and create income for you. Not created, but that's your income. And a lot of times that is a way to qualify. There's other programs that even if your bank statements are not low, because sometimes, I've had clients that don't deposit everything in their bank statements. Regina probably can attest to that, right? So there's other loans that are called profit and loss loans, right? If you have a profit and loss, you can also secure a loan, right? So there's many ways that as a self-employed individual, you can get it, right? But to answer your question, we'll ask for the taxes because that's the best program for you.
Is the interest higher if I don't have it? Or if I want a higher loan, will be better to have the taxes done?
Yes, interest rate will be slightly higher, sometimes depends on your credit, but yes, sometimes they're going to be higher because there's more risk to the lender, right? If the lender sees your taxes, they see it as less risk. Now, again, the government-sponsored entities like Fannie Mae and Freddie Mac, those are government entities that buy loans and they write guidelines. They are working on something that I don't know how long it'll take, but a way to basically tell what a self-employed individual makes without tax returns.
Okay.
It's going to be technology, right? They're probably going to go into your banking records and create some type of technology that's going to say, this is your income. It's going to favor self-employed individuals in the future. Why? Because, if you write off a lot of, if you have a lot of write-offs and less income, then you're gonna pay less taxes, but you might be able to get a loan in the future. But for now, yes, we'll ask for it just because that's the best loan program for you.
Okay, so I thought that you need your taxes all the time, and what happened is that sometimes we just file taxes because we don't want to pay taxes. So we start adding a lot of expenses. I really don't recommend that. And why? First of all, okay, if I want to ask for a loan, not only to buy a house, but a business loan, they are going to request or the profit and loss or the taxes. If you want, I don't know how you write the FAFSA, but for the loans for the school. I have a client that came to my office 2 weeks ago because her daughter, you say her daughter or his daughter? His daughter needs to request the FAFSA, you know, the financial aid. If you go to college, you cannot go to college if you don't have the FAFSA. So you need to request that. And to request that, you need the tax return from your parents. So that is the only time people come to see me because they are really, I need it tomorrow, okay? And they have 4 years of not filing taxes, and they bring all of these bags with receipts and all of the bank statement, and they want it to be done tomorrow. So people look, or they come to my office only because they need the taxes, not because they want to file taxes. So you need your taxes to be able to do a lot of things. So be careful to think about it. And yes, there's a lot of people that will not include all of the income into the tax return. Or there's a lot of people that have a house and they bought a house many years ago and they rent that house to someone and it is not in the taxes. So all of those things in the future can affect you for anything, okay?
Yeah, I wanted to share something about that because a lot of times people think they're doing something good by not reporting, especially in the rental income.
Yeah.
Right, Regina?
Right.
That's income you're not showing, and those are deductions you're not taking advantage of. And one of the things that I would say is go to the professional, right? If you're gonna go get surgery, would you go with the cheap or the lowest cost surgeon, or would you go to a good one? Right? And that's what we have Regina here. So I want you guys to take advantage of this. I'm sure Regina's gonna be super busy. But don't just go there to get, bring all your salary receipts to have her do your taxes. Just hire her to do your tax return, going forward so that you can have everything in order. So you need a loan for a car, you need a loan for whatever business.
6 minutes
to be able to do it.
Okay. I want just to go really quickly to the rental so you will know, okay? So rental that I was telling you, it's a passive income, okay? It is great to have rentals and a business because that will be always your cash flow. It will be money that comes into you. And also the rental, sometimes, most of the times, it's really, you pay, first of all, you don't pay self-employment tax, so you don't have to pay that. Second, remember, in the rental is the income also minus expenses. And part of this expense is the depreciation, okay? What does that mean? The value of the house when you buy that house. No, it doesn't matter that you're still paying that house. We can make the depreciation. So the depreciation, if the house is $200,000, I can take a little chunk every year because it will, according to the rules, it's 27 years, 0.5. So a little chunk of the value of the house, I will use it as an expense on that year. So honestly, a lot of times the rentals goes to zero, meaning I don't pay taxes because repairs, the insurance, the interest, the taxes of the real estate taxes, all of those are expenses. But if you include that house, then it is in the system, you are filing taxes, you let the loan officer knows that that rental, okay, it's self-paid, and then you can buy another house. Because what the loans officers knows is that if the house is being leased, you don't have to pay the mortgage. So you can buy another one. And then you can buy another one. Okay? Rental, it's, yeah. I'm bad? I'm wrong?
Just one thing, Regina.
Okay?
With repairs, right, it's important to know that some repairs,
Oh, they are capital expense.
some repairs are, you can add those back into your income. Like one-time repairs, like if you replace an air conditioning unit, right, what you must have is receipts, right? You have to have a receipt because the lender's gonna ask for proof, right? Not just, sometimes I've seen it, tax prepared, put it in there, and then the borrower has no receipts, right? So if you don't have a receipt, then it's not gonna be able to be added back to your income to qualify for a mortgage loan, right? Other one-time could be like doors, things that are not like typical, like landscaping and things that you're gonna be doing recurring to that property, right? So one-time repairs that take a long time, like, you know, if you remodel a kitchen, people don't remodel their kitchens every year, right? You remodel it every 10 years or whatever. So things like that, right, don't necessarily affect your qualification.
You can use it as an expense, but you don't,
Yeah.
it's not gonna
I
affect
was-
your
So
qualification.
what if they do the repair, they fix the faucet, right? And, or the AC, and they don't give receipts. How can you show receipts? They don't provide receipts.
Well, one of the things that is happening a lot, and I'm going to be honest with you, not only for the loan officer, but for taxes, if you audit, if you don't have a receipt, you are in trouble. That means that you didn't pay it. So there's two things that you can do. First of all, do not pay in cash. Nothing is paid in cash. Pay with a check. So you paid someone with a check or sale or whatever you want to pay that you have proof that has been paid. But be careful when you are doing sale. Because you put sale, you put Pancho. No. What is the name of the person? I don't want Pancho. Who did you pay? Okay, and that happened in construction. I have seen it. It's a lot of subcontractors that we paid, and we want to pay them in cash. Or because they don't have social, how are we going to do? They have a visa and they come back and forth. I know everything because I've been in business for many years. Paid with check, no cash. If you paid...
And just make sure you put their original name, Francisco Salazar.
Correct.
Not Pancho Salazar.
Correct. That will make you better. That's one. The second one, if you have to file a 1099 for that person, okay? And they are going to come and say, oh, I don't have social, I don't have IT. You will let them know. Don't worry, go with Regina, and Regina is going to apply for a IT number for you. And you start paying taxes. No, I don't want to pay taxes. Then don't work in this country. Sorry, I am in that part. I am very, ¿cómo se dice? Seria. It's because we want to come here and work, but we don't want to pay taxes, and you cannot do that. First, second, you want to buy a house. I know because I know a lot of people that they have IT number now and they can buy a house.
Why?
Because
They pay their taxes, right?
Because they pay their taxes. They show they have income. They show they can do it. So that helped them. So there's no excuses. Probably 20 years ago, it was more difficult for people with IT. I think that now, IT is for everyone, everybody.
Nice job.
Now, there's
Okay.
another question, Regina.
Yes.
There's a question from Zoom. They just want to touch on the topic of short-term rentals and if there's any benefits to taxes with that.
Well, short-term rentals, that's a very good question. If you want to rent a house for the Super Bowl 14 days in a year, you don't have to pay taxes. So if you, for 14 days only in a year, okay? So sometimes people want to, is it NASCAR or the whatever it is, and you rent that house in a short-term rental for $20,000, that's not income. Okay, you don't have to file taxes. Only 14. That's 14 days in a year. That's a rule. Now, if you have Airbnbs, all of those things that, okay, how are you going to do it? You can have all of the expenses on the time of the rental. If you have a house that is going to be always in an Airbnb, then you are allowed to have all of the expenses taken out. So you have to be very careful, because if I have a house in Flagstaff and I do it in Airbnb, but I go there 2 or 3 months in the year, those 3 months are not able to reduce any expense. Okay? So be careful, because yes, it's vacational or short-term rentals or whatever you want to call it, but you can use. So it is, you have to be careful, because we need to do the allocation. Okay? It's important to allocate that.
They have another question, which that same person, we're going a little bit over, guys. I hope you don't mind. I think it's going to be, I think we're getting great stuff here. They asked if they need an LLC, and she spoke about that from the beginning. It's better to have an LLC. An LLC is an entity in which you can benefit yourself if you do it as an S corporation, right? If you do an LLC,
You have to register the entity to have any type of strategies for taxes. So do I open an LLC? I will tell you yes. How? It all depends. It all depends on the business, if it's only you, if it's you and your husband, if it's you and your friend and there's rules, there's things. Will I recommend 100% all the time an LLC? Yes. Open an LLC, doesn't matter the type of business. Don't go with sole proprietorship DBAs, because that's going to make it more hard.
What's the last one you wanna open? SP.
Sorry?
the sole proprietor, yeah, exactly, the sole proprietor, the least amount. Yeah, so what happens is when you're a sole proprietor, let's say you do a job and somebody, gets injured or whatever. They are gonna sue the LLC if you have an LLC. If not, they're gonna sue you personally. And if you have rental properties, if you have whatever, and they're not in LLCs, they're gonna take everything, right? So basically, you're protecting yourself when you have an LLC because it's a separate entity. Even though you own that company, it's a separate person, not a physical person, but it's an entity.
So the better way to go is with the S.
And make that an S corporation, so if you're one or more. Yeah.
Or more, yeah.
Yeah. So really, let me tell you, the LLC protects you a lot. I have another all around. I have a client that owed the IRS $1 million, and he had LLCs, so he owed money in his name, not in the LLCs. They cannot go after him because everything is in the LLCs. So I'm not saying do that, because I'm always saying pay your taxes. But I'm just making you understand that the LLC will help you. Now, you just have to be careful. If you decide to open an LLC, I recommend you to have an insurance responsibility. Why? A liability insurance will pay for anyone that wants to sue the LLC. So they will go and be the ones that are going to take care of that for you. You need to have that because a person can sue you as a fraud. Fraud? How do you pronounce fraude? Fraud.
You're right.
So if someone wants to sue the LLC and me personally, will have to be because I commit a fraud. And they can go after me.
Commingle.
Personally, yeah. So one of the things, and thank you for saying that, because one of the things that makes you in trouble is if you use your bank account for personal, it's going to be in trouble.
Yep.
I recommend you, it's your own LLC. You only need to do this. Boom, transfer to the person, to the personal. Don't use your business account for personal use.
Yeah.
Okay? Don't.
Lawyers.
Don't pay the mortgage, don't pay the movies, don't pay any trouble, don't pay anything. Because if you have to go to bankruptcy, if you have someone is suing you, if you want to do whatever you want to do, really, just have your LLC. Doesn't matter that it was done in the past. From now on, today, open your business account, your personal account, and everything that is going to be personal, just transfer. That's it. If you are in an S Corp, you will be paying yourself with a W-2. Boom. If you want to take money out of your S Corp because you are allowed to have a distribution, boom. Just transfer to your personal, okay? That is really if I can leave you with some tips, you know, it will be honest to you, is don't pay with cash. Please, 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 don't do that. Deposit all of the money. If you want to sell your business, how people is going to know that how much your business is really doing? If you don't, you just keep it here, the cash. So do things correctly. It will help you. There are many strategies that are going to be allowed that you can do to reduce the payment of your taxes, but do things correctly. So don't pay with cash, and do not use your bank account for personal things. Transfer. Any other questions?
Yes, we have one from someone in Zoom, and they're asking if the loan of the house is under my name, I still can open the Airbnb under the LLC?
Yes.
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 And then one more, do capital gains need to be paid on the sale of a home?
If it's a primary residence, no. Remember, that is a good thing. You need to have your house at least for 2 years. If you have it less, no, wait 2 years. 2 years. So if you have a house and you sell your house, 2 years later, if there's gain, remember, how do you do capital gains? It's going to be the price when you purchase minus the price when you sell. That difference, you can add the cost and the remodeling and all that. Remember, you can add all that. So the difference between one and the other, if it's more than $250,000, then if you are single, you pay taxes. If it's $500,000, then you pay taxes. But less than that, you don't pay taxes, okay? If it's your primary residence. If I have a house in Flagstaff and it's my second house, in my investment house, you pay taxes. But there are other things that you can do if you want to. Do not try to give those houses to your kids, because that will make it gift tax. So be careful on the things that you are doing. There are many things, is just ask the right people when you want to make. I don't know if you remember, like 2 years ago when the houses were like boom and everybody was selling their houses. Then you were not able to buy anything, but you were selling your house. What happened? It's a lot of people came to my office after the fact, and they were paying a lot of taxes. But I have one client that I said, you want to sell that house? Go ahead. What do you want to do? I want to buy land. Well, land is an investment. It's not a deduction. So remember, expenses is not a deduction. So I said, okay, go and buy that land. It's good, no, but you have to do something. You want to put a fence? Go and put a fence. You want to put a storage? Go and put the storage. So we work, and at the end, she didn't pay any taxes. But we work with everything that we have, you know, because she had 2 businesses and she was selling a house. So it is very important. And just to finish, a lot of you know what is 1031 exchange. A lot of people want to say, okay, I am buying a house and I am selling that house, and because I am putting it into a new house, I don't have to pay taxes. No, be very careful. What is called 1031 exchange is if I have a rental house and I want to sell this one and I want to buy another better, you know, or I want to buy 2 more with the purchase of this, it has to be business. It has to be rented. You have to have a house that has been rented and then to buy something, to be 1031.
Yeah,
And it-
transfer. Actually, that's a great segue. We have a 1031 expert here.
Cool,
It's gonna
good.
come back to you. But we have just one last question, Regina, we'll let you go. Thank you so much.
So, followed by this seminar, I actually have an appointment with my Chase Bank, and they had asked me what kind of account do I have for my personal business. So I'm a mobile notary, and when I opened up my business, it was a sole proprietorship. And would you recommend that if I do open up a Chase business account, if I do end up changing to an LLC, would you recommend that I still open up a business account and then change the entity later? Would that impact anything?
So you are a notary. I will open for tax purpose an LLC with one member is called disregard entity for tax purpose. It will not affect if you open an LLC or not. You are right now as a sole proprietorship. If you are a notary, depending on the income, I will probably recommend something different. But right now, do not worry. Just go ahead and open the bank account. That is a must. And open it as a business checking account. But don't worry about opening the LLC. It all depends on your income.
Okay.
It will be important to find this. That's what I'm saying is, it is not general for everyone the same. So just careful. Okay?
Thank you so much, Regina.
No, thank you.
Appreciate you.
Thank
Is that
you.
good, guys?
Thank you.